Hey, what's going on, guys? Blood Phantom 81 here. Today we'll be doing a recap of the overall stock market. As you guys can see from my portfolio, I got absolutely smacked today, negative 1.1k. So those days do happen. I know that I mostly only show my green days, but I also do get smacked every once in a while. Today was one of those days, and I'm not really worried. I would say that I've been more so. I've just been sitting tight lately, and I think now is the time to be sitting tight. I think maybe 4 or 5 months ago was the time to be swing trading, but right now I'm just getting into my long positions. As you guys can see, I am only $1,000 in buying power. So I've spent the last 2 days buying a lot of stocks, and I know that I don't like to show my Robinhood portfolio that much, but let's go ahead and take a look at the overall stock market, and I'll show you what I mean about sitting tight. So this is the S&P 500. In my last recap video, I said that it's possible and pretty likely that we're gonna fill this gap right here. So this gap is on SPX. You could probably see it on SPY as well, but there was a gap right here, and this is when we gapped up to all-time highs. So we came back and we filled that gap. It looks like all systems are good to go. Not only that, but we filled out this support right here. We came and retested this green box, and this looks like nothing but a normal and healthy consolidation period. The crazy thing is that the Nasdaq looks exactly the same way. So let me go ahead and look at NQ futures. So what do we have here? So this support line, which is now support, by the way, so this used to be resistance. So on my videos, I will usually draw a resistance line like that, but since we broke out of this red trendline resistance, it now became green trendline support, and so we can expect to bounce off of that. So we have this support forming. We have the support forming of this green trendline support, which has acted as support ever since April of 2018. And then we also have this green trendline box. So all of that sits here at around maybe, I don't know, 7,480. So yeah, so basically price action has a lot of support. Will we bounce from here? I'm not sure. It's possible that we do form a lower low, although I don't know about that because we also have 50-day moving average support. So everything kind of showing, yeah, everything's meeting up in that area. And so I've been buying really aggressively, and I do expect that the market will bounce from here. One thing I want to note is take a look at how much the Nasdaq threw up today. So tech stocks are clearly leading the drop. But let's go ahead and take a look at XLI. But look at that. So industrials are showing a ton of strength. And so basically this kind of look right here is the look that the Nasdaq is having, except we haven't had this green breakout day. So this is the kind of thing that I would expect the Nasdaq to have maybe going into next week or even later this week. But basically, it looks like we're about to break out. And so this entire thing looks like a consolidation period that's about over. So we are now above the 50 and 200-day moving averages. It looks like we're about to get a golden cross where the 50 crosses above the 200. So that's going to happen pretty soon. This entire thing looks very much like a bottoming pattern, almost like an inverse head and shoulders, where this is the left shoulder, head, and then right shoulder. Something like that. It doesn't have to be exactly like that. It's more about the psychology. So we do have quite a bit of a gap to fill. And so some stocks that I'll be watching out for are Boeing, which has probably been a lot stronger, but Boeing looks absolutely amazing. Let me go ahead and draw some red trendline resistance. So this is what I'd be watching out for in Boeing, but we also have the similar look of the left shoulder, head, and then right shoulder. If you guys don't know what an inverse head and shoulders is, it's basically head and shoulders pattern. It's basically kind of like a bottoming pattern, something like this. It doesn't always have to be very pretty, but it's a very bullish sign nonetheless. So we basically have some kind of breakout and then a retest of the neckline before breaking out higher. So that's kind of what I expect. So this is what I'm watching out for. So Boeing is set to break out, as well as Lockheed Martin. I think I'm very bullish on both of those. So industrials are something to watch out for. The other thing I want to say is Netflix. So I accidentally bought $1,000 worth of Netflix. Don't ask me why. It was an accident. I don't know, I guess I got carried away. But so I'm now $1,000 into Netflix right now, probably my biggest position ever. Um, and I've definitely been swing trading Netflix. Let's go ahead and just pull up the chart so you guys can see my holdings. So very, very bloody day for Netflix, minus 6%, which is exactly the kind of thing that I want to see. So yeah, I pretty much just been swing trading Netflix. The first time I bought it was here on August 2nd, and then so bought at August 2nd and at 339, 323, and then sold at 367, and then am buying again here in the 340s. So that's kind of how I've been swing trading Netflix, and expect to see some continuation to the upside. Obviously, there was going to be some 50-day moving average resistance, so that's exactly where we got smacked out of. There's probably 1, 2, 3, 4, 5, 6 candlesticks against this resistance line. And so, yeah, so pretty bullish on Netflix in the long term. And then I think Twitter also took a hit today. If you guys aren't in Twitter yet, I think now would be a good buying opportunity. We are showing support at the 200-day moving average, which is exactly where we bounced the first time. But it's also a little bit concerning that we've been kind of meandering around here. So take that with a grain of salt. Me personally, I am bullish on Twitter. And then if we go over to Facebook, so Facebook, my last video, I said Facebook was kind of iffy. So we had this kind of bear flag forming. We went up above it for a little bit, and then we eventually broke down below it. So this is now resistance, and then this green trend line support is now red trend line resistance that we have to watch out for. So it's definitely a laggard in the FANG stocks. Like I said in my last video, I think sentiment was kind of not bearish enough on Netflix in order for there to be a significant bounce. I think a lot of retail was buying the dip. So one thing to watch out for is that this doesn't look like a very nice looking, I guess, last 3 days. So today there was a lot of shorting, obviously, with this upper wick, and then we finished near the lows. And it's only a matter of time before we break below the low that was formed here. So on Facebook, I will expect a little bit more continuation to the downside before actually stepping in again. So my price targets for Facebook are maybe 163, around that range. Anywhere from 163 to 157. So that's what I'll be watching out for. But yeah, so that's going to wrap up this video. I hope you guys enjoyed it. I hope you guys, your accounts weren't as bad as mine. I was like down like 1.1K or something like that. But it's all good in the long term. I'm feeling bullish stocks. So I hope you guys are too. And I hope you guys are having a great night and good luck trading.